All right, what's up, guys? How's everybody's day? And today we're going to be talking about how fun is dip buying because it is very fun once you start to make money. So, what do you do when the RSI is telling you to buy it? Or how do you know when the RSI is telling you to buy it? Easy. The RSI will let you know when to buy when it turns blue or when the line goes below 30. Once it goes below 30, that's when you start to see the line turn blue or whatever color you have it on. And that signals it's too many sellers in this stock. Let's go ahead and buy on the dip, on the selling weakness or on the buying weakness, and then watch the stock bid back up once the sellers are exhausted. And for me, I've found that to be very profitable. And as you see here on the chart, this is one of the this is how I finished a week green, or this is how I made 3 successful trades this week, or 4 playing the TTQ and day trading other stocks as well. So once I seen that this stock was oversold by a lot, as you see at the bottom where the line turns blue, it was oversold because bad results, and this stock went from $32 all the way to 7 pre-market and overnight, and everybody was just panicking. You start to see a lot of sellers get out as you see that huge volume spike right there as you see it, and that caused a lot of people to lose a lot of money. But we're not going to talk about the people losing money. We're going to talk about the people gaining money, which is me, which is the people in my chat room, the people that take advantage of these dips, the people who take advantage of the RSI, the people who take advantage of the weakness. So when this stock opened up, I was not buying on the high RSI because I knew this stock had to come back down to the oversold levels or close to oversold levels. So I was tracking this pre-market, and I start to put my price level where the RSI, as you see the red line. The red line is not an RSI indicator. That is a custom indicator that I made just off observing where the RSI was going. So once the RSI went below the red line, or when it touched the red line, that's when I knew to buy, because it's been trading around there the whole time and bouncing off an imaginary line. So I just go ahead and put the red line there. And that's exactly how I knew to get in at the right price. And as you see from the RSI, it bounced, and it bounced again, and it bounced some more. And that's what I want you guys to do. I want you to be able to buy at a dip and let your money bounce up. Don't let it bounce back down. Once when you let your money bounce back down, you're incurring a loss. So please don't let that happen. So when the stock opened, I did not buy on the market open, because that's completely crazy. Please do not buy on the market open unless you have like a huge account. I would say preferably $10,000 or more, because these small changes in the stock, say like the stock is down 70 something percent, you're going to see a small pop in the stock, which is the people with the large accounts, or the people relief selling, and you're going to see the small you're going to see these small pops, and then after the small pop, the stock falls back down. So once I seen the small pop in the stock, once it opened, you have those people who wanted to sell. You had those long-term investors who wanted to sell. You had some people who just got in yesterday, wanted to sell, or let's just say you have a long-term, the people who long-term in the stock decided to sell it off, or they decided to buy some more. Who knows? So, but there was a lot of selling going on when this thing opened, and pre-market when this thing fell down all the way to $7. So what I did was wait. You don't have to buy it on the open. You can literally wait until it moves how you want it to move, which is why I profited on this stock, because it moved like I wanted it to move. You see me plot my line. You see me manage my risk reward. I'm not going to risk buying this, in the early 9s, when I know this thing can fall right back down and go back to the low 8s, the very low 8s. So when it opened, I waited 5 minutes or so, and it turned to 10. And what I did was wait until it hit the right price, and followed the RSI and bought. I was buying in the low 8s, and then Started buying 828, 831 ish. It was like a partial fill right there, and I just let the stock ride all the way up, and I start to see the overbought level being close, being close to being touched. So I quickly sold at 872. Now the stock went back down. As you see the RSI, it went back down. And when it went back down to to the oversold levels, it was at 840ish. So the RSI can change. It doesn't directly follow the stock price. It just measures the buyers and sellers in the stock. It does not measure the price. It's just buyers and sellers. So once I was able to do that, I seen it go in the eights, and I was like, okay, I missed out, and because this stock went from 8, 9, 10, 11, and 12, and right now currently it rests at like around $10 or so. So this stock was very interesting and very fun to play because it's a biotech, and biotechs are very, very fun to play once you buy them on the dip because there's a lot of money to be made. I don't want to buy a stock, that's up 100% or 200% because my upside is very limited. You don't want to do that. You're just feeding it to the people who want to get out of the stock. They need more crazy people who's going to buy these stocks up 100 or 200% because they know people are going to buy them because for some reason they think that they're going to make some money, or they think they're going to make 200% again when the stock has already made its move. And your upside is very limited. It's like 10%, and that's it. The real people are making 200% waiting for some fool to buy into the stock so they can go ahead and sell it off. So that's what you have to think about when you see people talking about, play this stock is up 200%, blah, blah, blah. These stocks are just waiting. They like the people who have these stocks are just waiting for somebody to go ahead and fill their sell position because they're ready to cash out. They have a 200% day, and you're having a 5% gain, and you think you're doing something, but somebody just doubled their money and doubled their money twice, and what have you done? Nothing. So that's something that you have to look out for. Be careful when you buy those stock that are already up. Please be very careful because you might be going into an overbought situation. Also, please do not get caught price watching these level 2s. As you see, I have it circled. You see these high 8 orders. This is very early in the day. This is when I captured my gain and got out. So I know you see the high 8 orders turning green and the low 8 orders turning green or turning red, and you're thinking, okay, you're going to be optimistic and say, okay, this has room to go all the way down there and get filled at that 8 something price level. How do you know that? Because the stock can easily tank another 20% just because people don't like it, or people see an opportunity to short it even more. Or the news comes out and say, hey, this stock is going to tank some more. But please don't get price watching. Please don't get caught price watching. Excuse me. Please do not get caught price watching because a win can easily turn into a loss quickly. Do not get price watching. Do not get caught price watching. So this is a perfect example of buying low, selling high. Because the price dropped, and I took advantage of the price dropping and just let my profits run up because I knew that this stock was going to run up just because the stock is down over 70%, or this just fits my strategy every time I trade. I need something to drop over 50% for me to be somewhat interested in it because I know that my upside is very huge and my downside is very limited when it found a bottom. That's what people have to be paying attention to. You don't want to buy stocks that's up 50% and have very limited upside. Look for something that has huge upside. So you want to take a look at those things that are oversold, not overbought. So also, I have my traders here who took advantage of the dip buying with me. And, they're growing their small accounts. I'm growing my small account as well on Robinhood. And we're just taking advantage of this commission-free broker. I mean, it's commission-free, so what can you lose? I mean, You can play around with these TD Ameritrade or Scottrade or blah blah blah, and you don't have to pay them $7 or $10 every time you place a trade. But let's save some money and let me maximize my profits. Let me make that extra $10 instead of spending that extra the extra $20 or the extra 14, because the buy and sell is $14. So when you buy something that's $7, sell it that's $14. So you have to already make sure that you're making over $14 or over $20 to squeeze out a profit. And this just takes a lot of pressure off your account when your account is small. You don't have that $10,000 account, that you see a lot of people trading off of. And it just gives you more room to grow as a trader and more room to grow your account balance. And it's very easy. People should be taking advantage of it. And the questions that I get so far would, because I posted a dip buy just like this one, but it was another one. It was another company. It fit this exact same description. It's in one of my videos, but I was asked would I hold this stock or would I keep buying this stock? Then the next day. I really don't care. If the stock has weakness, I'm going to buy it. But for a long-term, perspective, I don't see this thing going back up to regular price. It could go back up to regular price, but I really don't care because I don't want to hold it that long. Just like when you see something with a price target, that's a 1-year price target. It takes 12 months. I'm up over 80% because I quickly trade things. I don't hold them. If I want to hold some, I just go to my TD Ameritrade account and I'll tell you about my holdings, just like I did in my my early beginnings on this channel. But for this trading account at Robinhood, I just simply trade these stocks. I don't hold them for more than 3 days or more than 2 or more than 24 hours. I'm just in and out of the trade. Once it appreciates, I'm out. Depreciate, I'm out. If it doesn't do what I want it to do, I'm out of the stock. I'm not looking to hold on to it or, I can make 100% in just 3 months because I'm already 19% away from making 100%. And I'm pretty sure I'll probably get that before September. So I'm not going to keep holding this stock. Of course it's going to run up. I could have doubled my money just about. But I'm not, I don't care for that. I don't care to hold a stock because it goes against my strategy. If it fits your strategy, go ahead. But it doesn't fit my strategy just to hold a stock over a series of months just to make 100%. 100% sounds nice, but I'm pretty sure I can get 100% within a couple of trading days. So it's just up to however you want to trade. You have to find your identity as a trader. So also, people ask me, is it a good time to invest or buy stocks? Watching my videos, you can pretty much have an answer for yourself. I can't answer that for you because I could say now's the time to invest. Now's the time to short the market at the same time and confuse you, to do it on purpose, because I'm not here to recommend anything for you. I'm just here to help you find the right stocks to trade. And the right broker I recommend is Robinhood, just because they're commission free, and TD Ameritrade because they have all the tools and the level 2 quotes that you need and all the tools and analyzation that help you trade the stock. Because if you're just trading on Robinhood, you're trading blindly and you don't know where this thing is going. You don't know what the RSI is. You don't know how many people are buying it. You just see that the percentage up and you don't know when that thing is going to go down. So pay attention to that. And how do I find my stocks? I find them on TD Ameritrade, pre-market movers or post-market movers. And I just simply look at the RSI or the daily moving average to know if the bulls or bears are in charge or if there's a weakness in the stock, and which is a great example on how I profited on the stock that you just seen. And I just simply go over that before the stock market opens and understand where the stock could go and understand how much upside I could have. And that's all I have for you guys. Stay tuned and subscribe. Thank you.